please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
I think that is the biggest short-term threat to the market. If he announces somebody on the hawkish side, I think there'll be some digestion problems.
What do we have a lot to talk about? That's coming up in the second hour of the closing bell, including the earnings coming from Whirlpool in just a few minutes.
Welcome to the closing bell. I'm Sarah Eisen in today for Kelly Evans. Here's how we're finishing up the day on Wall Street. A weak start for the week coming off of those record highs. Stocks lost their earlier gains. We hit intraday records for the Dow, S&P, and Nasdaq this morning. Gave them up throughout the session and a sell-off into the close. The Nasdaq closing the lowest of the big three, down 610. Saw some real weakness in social media and FANG stock. The Russell 2000 index of small caps closing down 0.75%. The Money 2020 conference is underway in Las Vegas. Coming up, you'll hear from the vice president of Amazon Pay. They'll reveal where the service is expanding and how the company plans to take a bite out of Apple's pay market share. Joining us now to talk markets, Dennis Berman from the Wall Street Journal, Jim Kahn from Wealth Enhancement Group. Let's kick it off with some of these market moves today. Stocks closing near session lows, as mentioned. This after the Dow, S&P, and Nasdaq all hit new highs. Today's big winner in the Dow was Walmart, while the biggest loser was GE. Trading on the top of the S&P was Seagate, and the biggest laggard was Arconic. So, Jim, a few stock-specific company stories there with the individual movers, but overall a little bit of softness after a very strong week. What stood out to you?
Well, let's talk about General Electric. There are a lot of people that have GE in their portfolio. It's been a really steady dividend stock. People feel like if something's going to go wrong with GE, then something's going wrong with the country, and so people feel very safe with it. But if we look at the earnings, they're really not that bad. They made a big bet in the energy space, and that bet basically went south because the energy market went south. And if you look at really where the real ills in the business were, it was really in the power business. And the power business was just, it's a small part of their overall business, which is very poorly managed. They had a management team in there that basically overbuilt, so they oversupplied. And frankly, they've got that cleaned up. They brought a new management team, so I'm not all that worried about GE. I do think there'll be more speculation about a dividend cut, so I probably would stay away from the stock at this time. That said, I think Walmart's doing all the right things on the .com side. I think their partnership with Lord & Taylor is actually really interesting. Right. Macro trend there is these big box retailers have to find a way to use their physical locations as an advantage. And if they do, I think Amazon's going to get a little bit of a run for their money.
There was some news today, by the way, on Walmart, which was Jet.com is going into private label to go up against Amazon, which is already in private label.
They're all positioning themselves. Dennis, how does GE not cut the dividend? I mean, first of all, you know, John Flannery's going to do what all new CEOs typically do. Cut costs across the board. That's a great way to try and get things started. His earnings report was like the classic kitchen sink earnings report. Just throw everything in there to make it look as bad as possible. But the dividend is going to have to be cut, don't you think?
I mean, the fact that he did not say it would not be cut certainly is a sign to the market that it probably will be cut. And the market's responding. I mean, down 7% today. That is a big number for a stock like GE. And I did a little math, okay? So right now it's paying 96-cent dividend. If you cut that to the S&P average yield, which is about 1.9%, that takes you down to 40 cents. Now they can't pay that, but around 66 cents at a 3% dividend yield, that gets you about a $22 stock where it is today. So in my mind, the messages are clear. The dividend cut is coming, and your previous guest seems sort of undisturbed. But if I'm a GE shareholder, I am kind of disturbed right now, I must say.
I'm disturbed. I'm disturbed as a GE shareholder about a dividend cut.
This is Jim looking disturbed. Okay.
But that said, I think underlying, there's a business there that's very valuable and that will continue to generate growth and continue to build products that people want in the market.
Haven't we been saying that for 16 years, though?
Is it in its current form?
And it continues to be true. And yet we value these FANG stocks so highly, and they continue to lose money. So here's a business that we're upset because it's not making quite as much as we expected. Yet we have these companies that have incredible valuations that lose billions and billions year after year that we love. It doesn't quite make sense. But that said, I think in the end, GE builds products people like, and the stock's going to be fine.
Can we not?
You pivoted.
We're going to go to the FANG stocks now.
Okay.
Hang on one second.
Pivoted us nicely.
We need to introduce the topic.
Yes, FANG stocks lower for a fifth day in a row. Facebook, Amazon, Netflix, Alphabet down about 1%. Social media stocks, Twitter and Snap also lower for the day. There's Walmart, which was higher. We'll we'll get some earnings, a lot of the big ones coming out on Thursday. Dennis Berman, has the tide turned here, or are we expecting another blockbuster quarter, especially from the Facebooks and the Amazons and the Googles of the world, which tend to be blowout, even in a period where there's some political pressure?
I know. Well, down 1.8% or so. I don't view that as that meaningful. Facebook, I think, started the year maybe around $130. Now it's, what, a 175, 180, somewhere around there. So these stocks have done incredibly well this year. I don't view the backtracking in the last day as significant. And right now, the market is anticipating large earnings increases from these companies, and I see no reason to expect otherwise. The only thing I think that does weigh on it, and Barron's touched on it over the weekend, is, are these companies really under antitrust or government regulatory risk? That may well be the case, but that is not something that's going to affect earnings this quarter or even earnings next year. It's a much bigger macro picture that's a 5 to even 10-year process underway. So I wouldn't let that affect the current earnings picture.
Okay, so you already dinged the FANG stocks, but that's the future, isn't it?
I'm not a huge believer in the future. I want the future now. If you remember,
you have no hope.
If you remember, Google was a late entrant into the search engine business. It tends not to be the first entrance, but the second, third, fourth entrant. And there are very few companies that actually make it through that J curve. And so when you see these businesses, especially like a Twitter or especially like a Tesla, that are putting, and granted those aren't FANG stocks.
Well, I was going to say, so somebody's going to overtake Apple, somebody's going to overtake Netflix, somebody's going to overtake Google.
But let's talk about Netflix. Netflix has like $15 billion of promised payments to content providers over the next 10 years. It's just very difficult to see where they get the return on the capital that's been invested. They might end up being profitable, but I think you're going to see a lot of malinvestment. You're going to see a lot of that value that's been invested in these businesses actually destroyed over the next decade or so.
All right,
it's very hard.
As my former colleague, the late great John McLaughlin, used to say, next topic. Under Armour hitting session lows after it was revealed that CEO Kevin Plank's first partner, Kip Fulks, is taking a sabbatical, as first reported by the Wall Street Journal. In addition, Under Armour is reportedly exploring exiting the tennis and outdoor categories. CNBC reached out to the company, and Under Armour says it is in a quiet period and cannot comment. Dennis Berman. Should we be worried about Under Armour right now?
I mean, when you look at the earnings or the revenue that they now produce over a given year, it is incredible. To the previous point about being able to compete against incumbents, Under Armour has done an incredible job against Nike. Adidas is somewhere in the mix there. So there's a natural cycle for some of these founders to move on and off. I don't view that as significant. Getting out of a few businesses is a point where I do. People are not buying shoes for the uses that they used to. It's much more a fashion item, and fashions come and go, and that should put more volatility into all these stocks, even though they're viewed as athletic stocks. They're really fashion stocks at this point.
I mean, and to be clear, he's not the founder. The founder is Kevin Plank, and we're going to have to start hearing from him soon because he can't only speak when times are good, which is something that Under Armour has done. And there's been a string of bad news for Under Armour, which I think the reaction has to do with the fact that Kip Fulks is taking a sabbatical without any explanation rather than the business.
Well, the company said, you know, after somebody's been there 10 years, they can qualify for a sabbatical, and he's choosing to take it right now.
Unclear.
Just tell me.
But I think there's a question here. Remember, a few months ago, this is a company that hired the former CEO of Aldo, the shoemaker, to be sort of the second in command, and there are questions about whether that's happening and whether there's a little more discipline and maturity in a company that has grown so fast and so tremendously under Kevin
But that's
Plank.
the problem. When a company grows as fast as Under Armour, and all of a sudden they see their core business starting to slow down, or the rate of growth isn't what it's been, what do? They decide to go into other lines of business that they don't know as well, and those lines of business then dilute the overall return on invested capital. And so what they're realizing is that they need to cut back, sort of drop some of these lines of business that actually aren't generating profit, so they can focus on that core business and actually start to make money for their investors.
Yeah,
I think that's the natural cycle.
They don't break it out, to be clear. Like, we don't know how big that tennis business is or the outdoor gear.
Well, we know it's not super profitable if they're going to get rid of it.
Well, the company's not been the same since Sports Authority went out of business, right? That was a huge
that was the start of sort of the downturn, right. And then they started losing market share to Adidas, which took over the U.S. in a very aggressive way. Nike's Investor Day is on Wednesday. That's been sort of a questionable one as well, a battleground stock. We'll find out what they've got in store. Got to mention the Nikkei on the
Yes.
next topic. The Japanese stock market closing at a record for the 15th day in a row. You thought U.S. stocks were hot.
Right.
This after Prime Minister Shinzo Abe's resounding election victory yesterday. I love, Dennis, that he was able to do what Prime Minister Theresa May was not. Call a snap election and get the 2/3 majority and cement it.
I know. It's incredible.
For investors, what does that mean?
Keep in mind that the intervention in the Japanese markets from the Japanese central bank is we talk about without precedent. It's certainly without precedent there. A continuation of those policies is certainly a helpful referendum for those who want to buy stocks there. But we cannot forget the big demographic picture inside Japan. That I think by 2050, they're going to be about 25% fewer Japanese alive than there are today. And so that has to weigh on this economy as we go forward 2020, 2025. But right now, hey, it's easy money. Let's keep it going. Let's try to get that yen down as much as we can.
You can't talk demographics in the face of a ever weaker Japanese yen, right, Jim?
Right, but as an exporter, it's a big help. Sorry, go on.
Abe's done a great job for Japan. I mean, he's brought sort of a sense that Japan can grow again. It can be a great power on the world stage. The issue is with the 2/3 majority in the lower house of parliament, they're going to change the constitution. They're going to rearm. And the question is, what does it mean to have a more militaristic Japan in North Asia? And what does that mean for the relationships with North Korea and China? And I think you might see an escalation of geopolitical tension, which is something that investors need to be wary about. And this election is a pretext to that potential escalation in tensions.
All right. Pencils down, everybody. We're all done. Jim Kahn, have hope. Thank you for being with us. Dennis Berman, as always, thank you.
I'm going to buy Jim some GE stock. See how he likes it.
There you go. You won't sleep nights.
We don't pick individual stocks. We like to be diversified.
There you are. You've got the disclaimer in there. So the Dow has soared 18% this year, and a lot of that has to do with anticipation over tax reform. But now one of the world's richest investors is warning about what could happen to the market if tax reform does not get done. We have that story coming up.
Plus, we'll find out Amazon's strategy for growing its payments business and what has been an increasingly competitive industry. The head of Amazon Payments joins us later on Closing Bell.
And as always, we love to hear from you. You can contact the show here via Twitter, Facebook, email. You know how to do that. You're watching CNBC.
They're sharp. They help you get the maximum value for.
Hope you saw that CNBC exclusive interview this morning. Saudi billionaire investor Prince Awalid bin Talal. He addressed a wide range of topics with Andrew, touching on everything from taxes to Twitter and his most famous holding, Citigroup. He also talked U.S. politics, including his opinion of President Trump and how the president's policies are affecting the market. Listen up.
Well, look, Trump is a unique president. President Trump, has his own way of governing. I know that some people don't absorb this issue of governing through a tweet, but people have to begin accepting that. After all, right, $5.3 trillion of wealth is being created in the stock market in America. Clearly, this was created because there's a lot of optimism that healthcare will be finalized, and the tax reforms, more importantly, will be finalized also. So there's a lot of good policies by Trump.
We've talked about how much the market's moved already. Where do you think the market is? Meaning, do you say to yourself, this is going to continue? Do you think that there's going to be a hiccup along the way? How are you, as an investor, how are you thinking about it right now?
Let me quote the Treasury Secretary of the United States, Mr. Mnuchin. He just said that if there's no tax reforms, then the market will tank.
Will tank?
Yeah, yes, he said that. I'm just quoting him.
But is that what you believe?
Well, look, there's a lot of bet right now on tax reforms, clearly, because if you reduce tax from 35% to 20%, and on the corporate tax going down also, inevitably profits of companies will go up. So the valuation could go up also. So I think there's a big bet on that, obviously. But clearly, there's a lot of optimism in the United States. We've seen right now how the North Korean affair is not affecting much the market because they don't believe there's going to have a war there also.
Right.
So really, there's a lot of positive things, but the main ingredient right now of what happened in the stock market is really the tax reform expectation.
You've been a long-time investor in Citigroup, and there's a long history to that. But you've remained an investor in Citigroup. How do you think about the banking world in the United States today? Have you ever thought to yourself, I want to make an investment in Goldman Sachs, or I want to make an investment in JP Morgan instead?
Well, you've seen that now, how after the election of President Trump, how the stock market related to those banking industry ballooned a lot. For example, Citi went up from the 50s to now mid-70s. So that's almost 50% increase in less than 1 year. So really, the environment right now for banking industry is very favorable. Not only because interest rates will go up. I mean, even if they go up, I don't think this is going to be the main ingredient of having their income go up. But also the less regulation also is helping the banks also. So less regulations, more controls by the banks to learn the lessons of last decade, and the interest rates obviously going up will support. So all these events are really helping the share price for those companies going up. But I'm really happy with the investment in Citibank, because really right now, even with the big jump right now, they're still below book value right now. There's still plenty of room for Citigroup to go 100 and above.
I wanted to ask you about Twitter, because I mentioned earlier you spend a lot of time on Twitter. Are you still bullish on this company?
Yeah. Well, our investment in Twitter is a part of it, and parcel of a plan whereby Kingdom Holding is moving from the old investments that we had into the new type of investment, like JD.com in China, like Twitter, Lyft, and Careem, which is another hell driving in the Middle East. So Twitter is an integral part of it. Now, we are clearly very optimistic about that. Obviously, Twitter is not going to be easy, because they're facing some difficulties. But our entry point was very reasonable. So right now, it's hovering around break-even point. So any good news from Mr. Jack Dorsey and his team at Twitter, I think this will be reflected very much on Twitter.
First of all, let me just say, I've never heard him be this animated on television. I mean, I've heard him speak privately, off camera, and he gets that animated, but this is the first time I've seen him act like that on camera.
And strong opinions.
Well, he's a very, very savvy investor. He does his homework. Man, he's like the Saudi version of Warren Buffett. I mean, he does his due diligence, makes the investment, and then he stands back and lets the company do its thing.
But I actually found it interesting to hear him talk a little bit about geopolitics, about President Trump.
Right.
Really a backer of President Trump in many ways. It's sort of unusual to go outside the United States and hear that, but commending him for his straight talk.
Well, that's, it's all about performance.
Even on the NFL. Did you hear that? He weighed in on the NFL. The president says that you should stand during the anthem. You should stand during the anthem.
Well, I think he's applauding the performance of the market at this point, because he's made a couple of dollars.
Well, he has made a lot of money, right. He wouldn't reveal how many billions, but he did say that the Kingdom Holdings is up billions. Also, this new relationship between Trump and Saudi Arabia is certainly friendly. It was in President Trump's first trip, and I think that was reflected in some of those comments as well.
Very, very smart man.
Big news on the tax reform front. Speaking of tax reform, President Trump pulling out a big change in 401k contributions, even as Republican leaders in Congress consider not cutting taxes for millionaires. We'll have details on all of it in a moment.
Plus, a new report says that Fox News extended Bill O'Reilly's contract shortly after he paid millions to settle a single sexual harassment claim. How that could affect 21st Century Fox's bid for Sky News in the UK. President Trump is shooting down this idea from Congress that would limit 401k contributions to help pay for tax reform. Ilan Moy has more on the very latest on that story. Ilan?
Bill, Republicans are looking at limiting how much you can contribute to your 401k without paying taxes up front. Now, right now, that cap is at $18,000, but a source on Capitol Hill tells me that Republicans are thinking of reducing it to just $2,400. And the appealing thing for Republicans is that they'd be able to shift all of that deferred tax revenue from the future into the present in order to pay for those big tax cuts that they've promised. But President Trump made his stance very clear this morning. He tweeted out, there will be no change to your 401k. So not a lot of room for Republicans to work with there. And meanwhile, first daughter Ivanka Trump was also hitting the road for tax reform today. She was in Pennsylvania holding a town hall to make the case for expanding the child tax credit.
The cost of raising a child has gone up so much while wages have stagnated, often frustrating a parent's ability to provide for their children in that regard.
This is all about Republicans trying to argue that their tax plan primarily benefits the middle class and not the wealthy. There are currently 3 individual tax rates in their plan, 12%, 25%, and 35%. But Axios is reporting that they are considering a 4th rate on millionaires. Now, taxpayers that have $1 million in income or more currently pay an average federal income tax of $921,000. Overall, they pay about 18% of the nation's income tax burden. So we'll see if those numbers will shift over time, guys. Back over to you.
It's early. Thank you, Elon. See you later.
Waiting on that vote from the House to vote on the Senate budget.
Facebook recently allowed users to order food through its app, and now Amazon is following suit. When we come back, Amazon's head of payments details the company's latest move into the world of brick-and-mortar retail.
And hold on to your hats. This is the busiest week of earnings season with the likes of McDonald's, Amazon, Alphabet, and many more blue-chip names on the calendar. Coming up, find out how important this week could be when it comes to earnings for sustaining this market rally.
If you're just joining us, here's a quick look at the day on Wall Street. Minus signs across the board for the major averages. The Dow, the S&P, and the Nasdaq all hit intraday highs at one point, so that would have been putting them in record territory, but the market sank into the close, and all of them finished with minus signs. The biggest decliner today, percentage-wise, was the Russell 2000, where the small caps live. Sarah?
Time now for CNBC News Update with Morgan Brennan. Hi, Morgan.
Hi, Sarah. Here's what's happening at this hour. Joint Chiefs Chairman Joseph Dunford holding a briefing on the Niger operation, which left 4 dead. Dunford saying the soldiers attacked in Niger did not seek additional help for about an hour, adding that their families deserve an explanation of what happened. He plans to share information once the investigation is complete. The ambush happened on October 4th. President Trump awarding the Medal of Honor to retired Army medic from Alabama. Captain Gary Rose ran into enemy fire several times to provide medical care to his comrades during the Vietnam War. The 69-year-old is a 20-year veteran of the Army. And Secretary of State Rex Tillerson urging the Iraqi government to resolve their conflict with the Kurds through dialogue. Tillerson making that call in a meeting in Baghdad with Iraqi's prime minister. And rowing away in a giant pumpkin. West Virginia University college students hosting a special relay race on a lake. Horticulture students hollowing out the pumpkins to make them float. Who knew? Races like this are apparently popping up all over the country. What I want to know is how many pumpkin pies can you make with all that meat? That's the CNBC News Update at this hour. Guys, back over to Update at this hour. Guys, back over to you.
What will college students think of next? Thank you, Morgan. See you later.
The Money 2020 conference kicking off in Las Vegas this week, where top names in the fintech and payment space are all gathering. One of the top ideas this year, of course, targeting millennials. Chase unveiling its Fin by Chase app. The app allows users to open a bank account, make deposits, and set up saving plans right on their phones. Fin is available for iOS users today in St. Louis and rolls out to other cities and Android users next year.
And Intuit, the maker of TurboTax and Mint, is also launching an app called Turbo, which connects those tools. Users can track their income, their credit score, their debt-to-income ratio to help them better understand and manage their finances. Plus, Turbo provides advice on how to improve credit scores and how to qualify and secure a loan at the best possible rate. The app will be available in January, just in time for the next tax season. Don't we look forward to that?
And our own Deirdre Bosa is out there at Money 2020 right now with even more news. Starting in November, Amazon users can order takeout from local restaurants directly from the Amazon app. It's all about apps. Deirdre's joined exclusively right now by the Vice President of Amazon Pay, Patrick Gauthier. Deirdre, take it away.
That's right. Thank you guys very much, Patrick. Thanks for being with us today. And they just had the news of the morning, expanding Amazon Pay in the real world. So you just order within the app. You don't have to use cash, credit, debit card when you get to the restaurant. My question to you, though, is are we going to see this program expand beyond restaurants, perhaps to other retailers?
Yeah, of course. As a matter of fact, Amazon Pay is not a particular type of use case. It's about enabling the Amazon customer to use their Amazon account and Amazon information to get what they love wherever they can find it. So of course we're going to expand that to different kind of in-store examples. The announcements that we made today with Clover is of course one that we're very excited about because of the growth of order ahead, but it by no means is going to be
Whole
limited.
Foods eventually? Does feature or feature like it?
Well, I wouldn't speculate on Whole Food. As you can imagine, this is a massive project for Amazon. and it has to be managed by the team that is working on
Okay, fair enough. We'll wait to hear about that side of things. But you've said before that trust is essential for Amazon Pay, for customers and merchants. But how do you build trust with merchants that may be worried about Amazon using their sales data to eventually compete against them?
That's a good question, and obviously one that I get quite frequently. The reality is, first of all, we definitely segregate the data, and the data that we use about payment is only for processing payment. But more importantly, Amazon as a company has built its success indeed on trust, and you can't be trustworthy with one type of customer and not with the other. The reality is increasingly merchants find that we are able to help them innovate and capture the customers who are absolutely willing to embrace digital experiences. That's 300 million customers that any merchant really is increasingly looking at talking to.
But even if the data says otherwise, I mean, you look at the markets and you had, for example, a Blue Apron that went public, and they would not have wanted Amazon to have their sales data because Amazon shortly after went into meal kits.
Yeah, so Amazon Pay, first of all, the data that comes out of Amazon Pay is really only the data necessary to process payment. We don't know what customers order. We do not have any detail of that. And that relationship remains between the merchant and the customer. We would be untrue to our belief that we have to earn and nurture the trust with our customer if we try to be in the middle of it. So we're here to facilitate the transaction. I am in charge of making it easy for an Amazon customer to buy what they want to buy wherever they want to buy it. And there's plenty of places in the world other than Amazon where lots of things are happening.
Okay, Bill's got a question for you back in New York.
Yeah, Patrick, I'm curious, is this just a millennial play, the growth of Amazon Pay? I mean, everybody's getting into the payment processing business, but from what I keep hearing, I mean, this Fin by Chase, this new app they just introduced today, they admit it was developed by millennials for millennials. Millennials are the growth for a lot of you guys. Is that what this is all about?
Well, clearly millennials are really an important population, and we definitely pay attention to that segment. But we're clearly not limited to millennial. Amazon has 300 million customers, and they cut across a segment of age and demographics and even geography. We're very sensitive to providing a solution to all of these customers. Now, one thing that is certainly worth mentioning is we see a preponderance of Prime users very engaged with Amazon Pay. And Prime users, as you can imagine, are a particularly important segment for us that we want to serve with the best experience possible.
Patrick, who would you say are your top competitors? Is it a PayPal or is it an Apple Pay?
At Amazon, we don't spend a lot of time focusing on customers. Jeff is famous for saying, focusing on competitors. Jeff is famous for saying, be competitor aware, be customer obsessed. And so there are plenty of people that are in the payments business today. I think, the world of commerce is vast. What I certainly can attest to for the time I've been in this business is that consumers increasingly are focusing their attention on the providers, the brands that they trust. They're willing to deepen the relationship with brands that they trust. So there are plenty of brands with whom certain segments of customers have a relationship with. We are clearly excited about being able to serve the Amazon customer wherever they are.
Now, something that I think that Amazon Pay, Apple Pay, the PayPals of the world all have in common is they envision a cashless society. How many years till we get there?
Oh boy. Cash has been around for several hundred years. I think that first what we're going to see before cashless society is definitely other forms of paper money starts to gradually move out of the system. If you look at, for instance, Northern Europe today, checks are almost extinct. And so I wouldn't necessarily try to predict when cash is going to go away. There seems to always be some industry that prefers them, but there are definitely many other forms of paper money that are going to go electronic for sure.
Okay. Got it. Thank you, Patrick, very much for being with us today. Enjoy the rest of the conference. One of several big tech executives here at Money 2020. Back over to you guys.
Thank you.
All right, Deirdre, thank you. And Patrick, thank you for joining us as well. We have an earnings alert. Here we go on Whirlpool. Seema Modi, how'd they look?
Bill, and a big mover here in after-hours trade. Shares of Whirlpool down as much as 8% on what is a pretty disappointing report. Let's start with earnings, $3.83 adjusted. That is lower than what the street was expecting. The analyst forecast was for $3.94. Sales also a miss at $5.42 billion. Wall Street was expecting $5.51 billion. But perhaps most notable, Whirlpool is cutting its 2017 earnings guidance. I also just want to break out the regional impact here. North America region reporting 5% revenue growth and 11.7% operating margins. That's despite a 90 basis point raw material cost increase. Now, the company also notably announcing a global cost-based price increases on a majority of its businesses to offset the impact of sustained raw material inflation, perhaps something that traders are, in fact, focusing on here. Mark Bitzer, the chief executive officer of Whirlpool, saying we are pleased with our revenue growth and free cash flow improvement, but are not satisfied with our operating margins, which were impacted, again, by raw material inflation, unfavorable price mix, and slow progress on our European integration. Again, guys, shares now down about 7.7%, and a noteworthy name to keep an eye on. Back to you.
Indeed. Ouch.
Well, that's a new CEO.
Maybe
Actually taking the helm.
Maybe another kitchen sink earnings report there.
And it has been a sort of weakish stock.
Wonder how much the hurricanes
underperformance
hurt
for
too,
the year.
right? Hurricanes had to have hurt. Thank you, Seema.
The potential takeover of Sky by 21st Century Fox may have hit another bump after news of Bill O'Reilly settling a $32 million sexual harassment suit, just the latest in a string of such agreements made by either O'Reilly or the network. The lawyer, who represents more than 20 former and current Fox employees in various lawsuits against the broadcaster, will be joining us to talk about it next.
Meantime, shares of Hasbro finishing sharply lower, down nearly 9% after reporting earnings and concerns about the Toys R Us bank